Taking a look at today's interest rate markets, let's look at the 10-year note futures today as they're realizing further upside today. We continue to see them climbing here, at least pushing towards the top end of the recent range. And with today's price action, we are seeing them now trading at two-week highs, 132.20 on the futures market. Again, pushing above the middle of the 132 handle now, and that's really the top end of the recent range when you look at the price action. And I think you have to look at the jobs number this morning. Highly anticipated jobs number came out, and initially we did see a reaction. We did see some selling pressure in the interest rate markets, the treasury markets, but then as they sifted through the numbers, by and large was viewed as a pretty positive number all the way around, with wage inflation moderating or actually coming a little lower, job creation's higher, yet the unemployment rate actually ticked up a couple of tenths of a point as well. So again, the idea is that, I guess, in theory, that inflation is temporarily moderating, at least from wage inflation pressures, and we continue to see job creations in the economic structure. So as the market sifted through that data release, we did see quite a bounce in the 10-year note futures and continuing to hold towards the top end of the range. And when you look at the yields today now, it is interesting. We're pushing back down towards the low end of the range here for the last several months, 144 basis points on the 10-year now. And overall, we're seeing a strength across the board in the treasury markets today, from the 1 year all the way out to the 30 years. We're seeing them higher on the session. We're seeing yields coming down across the board there, and the yield curve basically staying pretty consistent today, maybe dropping a little bit in the middle of the curve, more so than the back end of the curve or the front end of the curve.